Alrighty, so let's start to practice now drawing on and identifying these institutional zones. So we're looking for what we call, strong supply and demand zones, institutional supply and demand zones. Use whatever name you want, right? It doesn't really matter. The point we're trying to make with it is we're looking for, where did the big players step into the market to achieve something significant. In this specific case, we're looking at the ones that broke structure. So then that can help us filter out other supply and demand zones so we can look for where the strong moves are going to occur. So we're going to try and keep things relatively simple, and we're just going to look at one time frame. I'm here on the daily chart on euro dollar. Okay, and we're going to do a bit of bar replay and just sort of talk through my thought process and show you what I'm seeing and kind of how I view supply and demand with basic market structure in that sense. So quick zoom out, we can clearly see we have been in a pretty clear sustained bearish trend for quite some time. Nice swing pullback. Okay, and then we've had another break of structure to the downside. So let's just draw on the most recent sort of daily swing break of structure, okay, where we got the break of that swing low. So we can see we had that swing pullback and we came into that buy to sell candle that led to the previous break of structure back over here, right? It broke these lows. So we had that pivot, that buy before the sell, right? That broke these lows here. And then we can see price came in. And this is the thing, right? Price can tap into that zone initially. So imagine if you're back here in the market and this was 17th of March and we've got this zone and we know that potentially the price could pull back into here and continue down. Now, it took really, another 10 bars, another 10 days or so before kind of actually mitigated deeper and we really started to get that commitment to that lower high forming and getting that next bearish impulsive leg to the downside. So you do have to be quite patient when you're in the live market. This can take what feels like a very, very long time to play out. Where we initially got that tap, but then we pushed deeper into the zone, fill up more orders around the EQ of the zone, where we know the bulk of the orders are going to be, and then we finally broke structure to the downside. So now we are trading between this swing high, okay, and this swing low. So what do we expect after a swing break of structure? We expect a swing pullback on that time frame. First thing, obviously, we can look for is a shift in structure. We can look for a bullish chalk. And the other thing we can now start to look for is demand zones to the left, right? We can start to look to see over here, are there any previous, ideally unmitigated zones where we can anticipate where some demand may be filled, where we can anticipate that pullback. Now, it just so happens, because I've tried to use sort of more recent price action examples, that where euro dollar was trading at this time, it hadn't traded here for about, I believe, for a long time. Actually, we do have some lows here. So around sort of 2017. So that's kind of where that last real low is. So we have this wick here, of which you can draw on. But other than that, it was trading in sort of uncharted territory that I hadn't been for quite some time. And there's nothing really too recent. Like, for instance, when you're back over here, back in around, I think it was 2021, yeah. And like we're starting to, let's say, shift structure and we're starting to trend to the downside. We can look left and we can look at these old zones over here. And try and anticipate where potentially price may start to initiate those pullbacks from, right? You've got some old zones to work within. And actually, this is just a good zone I wanted to talk about, which I don't think we've spoken about previously. But when you have, so say, a demand zone, right, and you're looking for the bearish candle where the next candle closes above it, you see how this candle here trades lower than it, right? Because a common mistake I see when people draw zones is they draw their zone like that, okay? I was going to say don't do this, but if you want to be consistent with the way I view the market and the way we do it here, we always include the wick of the next candle, okay? So we draw it like that. So basically what you want to see is you want to see price come up and then you want to see the sell before the buy, right? That's the pullback on the lower time frame. That's the range. So whenever you have a candle like that where the next candle trades lower than it before the movement, right? You want to include that within the zone, okay? So that would be your whole zone there. But yeah, so coming back to where we are with the current price action, we don't really have anything to work with. So in this instance, I'm not going to bother, but that is what you can typically also now use to help you anticipate where that pullback may be about to occur. So what we can do is just draw on your supply zones within the current range, okay? So typically what I try to do is keep my charts nice and simple, and I'll only draw on the supply zones within this range. I'm not going to bother drawing on all of these zones up here, like an old price action, because they're just not relevant. Try and keep your charts kind of relevant to the recent price action, to this current swing range you're within, and just focus on that, okay? That would be my advice. So What we have here is kind of that supply range, right? That last pivot, which we can refine to that single candle. Some people would prefer to have, the bullish candle. You can do it that way, right? The buy before the sell bullish candle, or you can refine it to that candle there, okay? And other than that, we have a nice clean extreme zone at the top as well. It's a super clean classic supply zone that we would look for, right? And just the opposite of what I was just talking about there with the demand zone. See how this candle trades higher? So I don't just draw the, if I just zoom in, I don't just draw the supply zone to the high of the bullish candle, right? I include the wick like that, because what we're trying to capture essentially is that buy before the sell, right? And that's what we're trying to include in there. Cool. So that's our daily structure. We're bearish. This is our strong swing high. We have kind of two real key supply zones there, but I'm aware there's that kind of whole range there as well, if you want to refine it that way. Okay. Now, obviously, there's buy to sell wick zones here as well, but typically I don't personally bother drawing them on. I prefer, like I said, to stick to those main candle bodies. And if I'm looking at the lower time frame, so the 4-hour chart, I would draw that on as a 4-hour zone. Okay. I wouldn't typically bother drawing on the daily chart just because for me they don't hold as much weight. So I try to keep my charts relatively clean and just focus on those real sort of higher probability zones. Okay, so we're having a bit of a fractal pullback. And let's see, are we going to pull back up to our supply level or not? I'm going to go through this at a reasonably quick pace because remember, for now, we're just keeping it simple. We're just looking at one time frame and we're just going to run through it. Okay, so we've had a bit of a pullback. So you can see we've had that consolidation, that range, and we've had an initiation out of the range. So we can see that supply stepped into the market. So you can keep things quite sort of simple and loose and take that whole supply range, or we can refine, to a single candle pivot from within that. So, if you take the extreme, the next candle doesn't close below it, right? So then you can refine to the next candle. But then again, as you can see, none of these candles close below it. So you could refine it to that one there, right? And that would be kind of the sort of most refined way. Yes, it did have a bit of a tap into it. So when price closes below there, if I bring it back one candle, let's see, right? That's when you have a valid supply zone. It's a valid supply zone, but it's not an institutional zone yet, right? It's not a strong zone. It's not the zone we're looking for. Because remember, what do we need to see? We need to see it also break structure. Okay, so yes, it's a pivot and next candle closes below it. But until it does that, hang on. There we go. And then we break some structure. Now it's a typical zone we're interested in. Now this is a little bit sort of messy price action, and it's kind of hard to describe why I'm saying it's messy. Other than that, kind of when you have a zone like this, but you can clearly see, there could be orders behind it from within here because that's the whole pivot, right? That's the supply range. So if price were to come, say, into here, and I'm looking for a short, let's say, but price trades a little bit higher, and then say on the 4-hour chart or the M15, we get that bearish shift in structure, okay, and it looks really clean on the lower time frame, and we get a nice lower time frame supply zone. Am I still happy to trade from here because we traded higher? Well, in this instance, I would be because I recognize where we are, right? We're within this range, okay? And sometimes that will happen. So when I'm drawing my zone, I'll draw it to here, but I'm fully aware that that's the whole range there as well, okay? Cool. So other thing as well I'll say is whether you view that as a swing pullback or not, again, we're not 100% mechanical on that, like we've spoken about in the market structure module, but I would kind of deem that to be just an internal pullback. Relative to these large, big swings in price, you can see, if I zoom out a little bit, like how big these pullbacks are, like swing pullback, big swing pullback, big swing pullback. I would say it's kind of more just like internal structure. But it doesn't matter if you call it swing, as hopefully you've seen that in the other lesson. But yeah, so nice supply zone for us to potentially look for price to pull back into. So we're coming into here. Let's see, is it respected? Fills up those orders, and then we get a down move, right? So we could potentially look for short positions from within there. Now let's play price forward and see what happens. So that ends up failing. We get a bit of a reaction and then price pushes up higher. So this is where you go, oh, well, that was a rubbish zone, not really worth trading from, or it failed, or that idea didn't work. Well, if you think about it, remember, we're on the daily time frame, and that is a over 100 pip move. Okay, so depending on what time frames you use to enter your trade on, that could be a very lucrative move for you to trade intraday, right? Because you could go, okay, here's a daily zone. And then you look, depending if you maybe trade on the M15, the M5, the M1, whatever it is that you choose to use, that's going to be a decent amount of momentum to trade from, right? You don't have to get short from a daily zone and then just hold on to all of your profits to the low, okay? That's not necessarily smart trading because where are we? Remember, this is why you're always thinking about where are we within price and what are we expecting? What's our expectation? Well, we've had a swing break of structure and we know that at any point we could have that deeper swing pullback. So yes, we can follow the internal structure. Yes, order flow is bearish. Yes, we've come into a daily supply zone. Yes, this is a weak daily low, and yes, we could get that move there. That could totally happen. But for me, the way I like to trade is I like to kind of get in the move, take my profits, and get out. And if we've come into here and I know that, we could have that deeper move, if I get a nice, decent move there, 5R, 10R, whatever, there's 100 pips there to try and capture, that's good. I'm not the type of person who tries to swing a target there because this is what can happen. Kind of other key point I'm really trying to make here is when you start to draw on these zones in practice, you may just kind of draw this on and then flick through bar replay pretty quickly and go, that failed and prices pushed through, that zone didn't work. Well, just think about it. Would there be a tradable reaction? Yes, we can still capitalize on it, even though that's not where the daily move continues from, right? Okay, cool. So now what we have is we have that bullish IBOS here on the daily chart, right? So now we have the internal structure shifting bullish. So what's our internal structure expectation? Our expectation is that, let me just make this a bit thicker. Whoops. Sorry, bear with me whilst I just sort this out. Our internal structure expectation is that we will switch bullish to, okay, it doesn't change, I don't know what I did there, to facilitate that swing pullback, okay? Perhaps we'll come into the supply level, and if this supply level is going to be the level in which it will contain price, where it will then overpower demand, then we may then see that demand fail, the internal demand fail, then see the bearish IBOS, so then the daily internal structure will then shift bearish. This internal high will then become a strong internal high, right? Because it broke the internal low. That's when we then can assume that internal supply may now be back in control. Then we can look to short from the internal supply that broke that low, right? Because the daily swing pullback is now over, and now we can then follow that down towards the swing low, right? That's essentially what we're doing. Okay, cool. So at this moment, price is pulling back up, and we could potentially look for longs up towards this level. Where could we potentially look to get long, right? We've got a daily supply zone, a daily demand zone that led to that bullish IBOS. Now, when you get something like this, an inside bar, especially when it's very near the previous candle's high, sometimes what I'll do is I'll just draw it like that, okay? Because again, what are we looking for? We're looking for the pivot. We're looking for the sell to buy. What happened? Price came up, it pulled back, and it moved up. Okay, so when there's not really much of a difference between here and here, like sometimes I'll just do that. Or if you just draw the inside bar, that's fine. But remember what I keep saying. Have it refined, but if price, let's say you're on the 4-hour chart or the M15, whatever time frame you're using, and it comes down and it just misses your inside bar, and then let's say you get that shift on the M15, right? You get the break of structure to the upside, you get your nice M15 zone, right? And you go, well, we didn't quite mitigate my daily level, so I'm going to sit it out. You have to recognize where you are. We've mitigated that, right? We've hit in here, so there's a decent probability that we're probably going to go, right? So I'd be happy to take that trade. Now, it's not always going to happen that way. Sometimes we can get a full signal and it can come lower. It can then mitigate the inside bar and then we go. It's obviously going to be more and better confluence if we hit the refined pivot zone. But just be aware that if you draw your zones like that, but then you see structure really shift, either on this time frame or on the lower time frame, and you look left and you can make sense of what we're reacting from, then I'm pretty happy more often than not to get involved, okay? So yeah. Obviously, there are buy to sell wicks here as well. So on a lower time frame, there might be some clean 4-hour supply zones, which we also have to be wary of. But for the daily chart, again, I try to keep things simple and kind of focus on those high probable, single candle pivot zones. So let's just try and move this forward a little bit. Okay, so gone a little bit quick there, but essentially what we've now done is, let me bring it back forward. And this is why, in a live market, things go a lot slower and you can take things day by day and you can really study every little bit of detail of price action. But as we come into here and then we move, let's see, the candle to move down. Right, now we get the bearish daily change of character, okay? Because you hopefully can see where the fractal low is. We get the pullback, we get the movement up, and then we get the pullback. But when we break that fractal high, where is the last candle to fail to break the previous candle's high, right? That broke the high, that broke the high, it didn't break that high. So that inside bar is our daily bearish change of character, right? So let's just use the 4-hour chalk line because I don't have a save template. And there we go. Now we have a daily chart, okay? So where are we? Well, we know we had that refined pivot supply level, but we've now tapped into, we've tapped into the supply range here, okay? So we know that we don't have to hit the refined level, or at least, there's going to be some bearish pressure coming in. And we've now had a bit of a structure shift, a bearish daily change of character. So again, let's take things slowly, okay? Swing trend is bearish, right? We know we're in the swing pullback phase. Why? Because the internal structure has shifted bullish. We've mitigated a supply range. Okay, let's see whether that applies if we do premium discount. And we've pulled back up to the EQ. So we're starting to see a lot of bearish confluence come into the picture that potentially, because what we, swing structure is king, we've pulled back up to the premium or the EQ of the daily swing leg. We've mitigated a supply range within that daily swing leg, and we've seen a daily bearish change of character. So we're starting to see that bearish pressure coming in, that perhaps that may now be the move to go to the downside, right? But this is where it gets a little bit tricky because there's also bullish confluence. What bullish confluence do we have? Well, the internal structure shifted bullish. This is now a strong internal low. We have demand in the way, right? That caused that bullish IBOS, and we've only got a bearish daily change of character. So that chalk, what does that tell us? That only tells us that it might be an internal pullback into demand, right? Then we may see a bullish chalk to signal that the internal pullback is over, right? And then we may get a continued move. So if I could keep things a little bit more simple for you, when this happens, this is the first early indication that potentially the swing lower high may be forming and we may be going, but we have to be wary that we don't have confirmation of that yet. And we can look for shorts, but as we're coming into this demand, I would be like open to then looking for longs. But at the same time, when you're looking for longs, you have to be aware that this could fail because that might be the swing pullback over and we're going. And this is when you have a deep understanding of price action. You can always kind of see the case for and against, and it can get a bit tricky, but this is why you always have to manage your expectations of probabilities. And this is why I prefer to just look for these POIs of areas of where I expect a decent reaction. I want to look for a quick trade and I want to get in and out. I'm not constantly trying to capture like 400 pip moves for these 50, 100 trades that you see on Instagram. Yes, they're doable. Yes, you can catch them. No, I don't want to install any of my limiting beliefs onto you guys, but I'm trying to just, teach you my philosophy of trying to be a bit, looking for where the easy trades are and just getting in and out, making your money and moving on. Okay, cool. So when that happens, we get the daily bearish change of character. We now technically have this level of supply, right, that caused that shock. So now you've got two areas in which we can look to play a bit of ping pong from. We pull back up into the supply level. So perhaps now intraday, we can look for some entries from within here and we can look to try and short. Okay, so we're filling up those orders. We're going to move to the downside and we move to the downside. And then we seems that we smash straight through here with, it doesn't seem to contain orders at all. We smash up absolutely down through. Okay. So now you could probably expect with a decent degree of certainty that we're probably going to go down and take this low, right? When that happens, I'll just delete my zone. I'll rein this in a little bit. And now we also have what? We have this buy to sell candle here that caused the break of that low and also, it's pushing price down. Now you can draw this with the two candles there, right? You see how you kind of got that pivot with a buy before the sell. And it's nice as well. I like it when the candle closes below both of those. So that's a pretty clean zone there too. Now, what I will say is what can happen, I'm just going to delete this for a minute just to keep the charts reasonably clean. What can happen in this instance is, yes, the inside bar has failed, right? But this whole demand range still exists, okay? This whole sell to buy that caused the break of the IBOS is still here, okay? So, there could be some pressure, like there's still this sell to buy candle here. It's already been mitigated a little bit with this inside bar, so it's not as clean. This is why I much prefer to focus on zones that are completely fresh like this one. But let's say, right, price now starts to move down. What I might do is refine my zone. And I'm just aware that we could see some bullish pressure coming in. But if you want to focus on the completely unmitigated zones, the next one you have is this low here, right? You see how that's completely unmitigated? When that zone was created, when this next candle, the thrust candle, closed above it, you see how it's completely fresh. Nothing has tapped into the high of that candle into that zone. So that would be my next completely unmitigated candle. But what is this low? From a structure perspective, right? It's a weak swing low because this is the swing high. This is the swing low. We've now pulled back up to premium supply. We've had a shift in structure. Supply has been respected. Demand started to fail. We're seeing a lot of momentum come to the downside. So yes, the internal structure is still bullish, and yes, price could come up here and continue higher, but it's a lot lower probability because swing structure is king, and there's a much higher probability that the internal structure has done its job. It's shifted bullish to facilitate that pullback. That job is now done, and now we're ready to take out this low, okay, on the balance of probabilities. So I'd be very wary of looking for longs now. And what can happen is you can get a bit of a reaction, and intraday you can trade it and you can look for longs, but just know that you don't want to get in long here necessarily and try and target, this high. You want to just get in and get out because it's much more likely that low is going to go. So let's see what happens. So we come into that level, have a bit of reaction. This is what I mean. Intraday, you could play this. But again, there is still that possibility, right? This is a strong internal low, so we could get another movement up. But, I would base my primary forecast on what the swing trend is more likely to be doing at this instance. So we chop around. There's probably a lot of intraday opportunities here, and then ultimately we end up pushing to the downside. Okay, so now what I like to do is delete any sort of zones that aren't relevant. Let's get rid of that and try and keep it easy. Otherwise, your charts can get very, very messy and confusing. Okay, and now I'm going to refine this to the next swing high. Right, this is our current swing high. That was the last swing break of structure. So now we're within this range here, right? Okay, cool. So let's draw on our supply zones that we've got. So we've got, this level here that led to the break of structure. So typically I'll do something like that. Just take the pivot, right? So the buy before the sell, or you want to be a bit more refined. You could refine that to the inside bar, okay? But I just keep it. Sometimes you can just see how it's a little bit too refined. So I'd rather just take that whole level. Then we have another clean level here, right? We have this buy before the sell there. Just going to delete this just to keep the charts clean. And then we've still got that extreme zone, right? So we've got sort of 3 levels there. Obviously, the extreme is generally the highest probability because it's the level that has to hold if the bearish swing trend is going to continue. It's the most well priced, right? It's right up in the premium, but we have these levels here. Okay, again, swing breaker structure, what do you expect? We expect a swing pullback on this time frame. We can look left for old demand zones, and then we can look for structures to shift bullish, right? Like I said, in this instance, we don't have anything to work with on the left, so let's just wait for structure to shift to give us an indication of when that may occur. Okay, we don't get a bullish shock in this instance because all of these candles just about break these previous candles low. But yeah, now we're starting to pull back, seeing a little bit of sensitivity from these buy to sell wicks. Okay, that'd be something on the 4-hour chart, but nothing I typically tend to pay a lot of attention to. See how we traded just higher through there. And we're getting a bit of choppy price action, so let's just bring this a little bit more forward. All right, there'll be intraday opportunities, but let's kind of just focus on the major sort of daily moves. So now we pull back up into this pivot within the previous supply range. That's another thing you'll notice as well, is very typically price will pull back up into the previous entire swing range and tap into that, because that's essentially one big supply range as well, right? But I don't want to confuse you too much with that just yet. So we've had a nice reaction. What have we also had? We've had a bearish daily change of character, so pretty good signal, right, that the swing pullback may over. Swing breaker structure, nice corrective pullback up into supply, premium supply. Let's see, is it from the low to the high? Yep, up in the premium, right, of that swing range. Nice, strong shift to the downside, bearish change of character. So now you've got the supply that caused that bearish shock. So that's another level in which we could potentially see if price will pull back to. It might not always do it, because when you get kind of a corrective move and it's done its job, typically then it can be quite impulsive to the downside. And this is where you won't get those nice pullbacks. You have to be a little bit more aggressive with your entries on the lower time frame. And then what we're going to target, we're going to target the weak swing low. So let's just draw that on. Okay, cool. And then boom, then we get that swing break of structure. Okay, nice. So now this becomes our daily swing high. Again, you can delete your old zones, or sometimes what I'll do is I'll just rein them in a little bit, just to kind of keep the charts reasonably clear. So I know they're there, but they're not relevant to current price action. So again, this now becomes our swing high extreme, and then we have this pivot here as well. You can take those both candles, see how the candle closes below both, so I quite like that in that instance, or you can refine it to the single candle if you wish. Okay, and I've got this level. Swing break of structure, what do you expect? We expect a swing pull back on that time frame. And this is another thing, right? You see how this time we break and we close, but we pull back straight away. Here, when we broke, we fell for 1, 2, 3, 4, 5, 6, 7, 8 days, over a week, right? It's near a week and a half in trading days. So this is the thing. We never know what's going to happen after that break of structure. Sometimes we can pull back straight away. Sometimes we don't. And that's just something, you have to bear in mind. If you're looking to keep shorting, let's say on the lower time frame after a break of structure, sometimes you can get away with it and we can keep being aggressive on the lower time frames. Other times we can't, and we can get stopped out straight away. So it's a bit tricky in that respect, right? Okay, so here, we're struggling to break the low, right? We're getting a bit choppy. Let's see what happens. And then we come up into this level here. And this is sometimes when this will happen, right? I'll draw the zone with the two candles, but when price moves in, I'll just refine it just to keep, charts even a little bit more refined, like that. Okay, so now we pushed up. So potentially we can look for shorts now to see if that swing lower high is going to form. But I would also be a little bit wary that there is some demand here, right? That did cause a break of this internal high, okay? It's not the best in the world. So you can start from the apex of the move, right, the pivot, but you see how price has already filled up those orders. When that was created, price came in, filled up the orders, and then continued. So then I would move that along to here. That's the unmitigated zone, right? You can see nothing's tapped into it. since it's been created, and that broke that high, right? But again, this is when you can end up sometimes having zones everywhere, and you can get a little bit of paralysis analysis. And this is why you kind of want to concentrate on the, like, you know, if you're confused and you can see, you know, supply and demand both in the way, just think what's the more probable scenario, and then look at the swing trend and look at what's, you know, trade in line with the swing trend is the point I'm trying to make here. We've had the swing breaker structure, we've had the pullback to premium supply. So if we start to move to the downside, right, it's like the swing pullback is complete and we're going. So you can be wary of the demand and you might not want to short through it. And if you look for longs, you want to be quick in and out, quick intraday reaction, because it's much more likely that we're going to come to the downside in that instance, okay? This is the level in which you want to be, you know, it's going to have high probability because you're trading pro trend, right? So we see orders are being filled. So we could push higher from here and we may want to come up to here, but look at the reaction from that level, right? That would make me think we're much more likely to want to take out this low, right? On average. So, but you can see how they're intraday, 1, 2, 3, 4, 5 days or so, bit range bound, right? And you can look for quick trades in and out. And then finally, we break down and break below that low. So we get another swing break of structure there. So let's now rein this in, okay, and draw on our new swing range. Always be drawing on the current range you're within so you don't get lost in price action, right? Okay, cool. So now we got this level here. The extreme has already been mitigated. So this is kind of a good one to talk about, because in this instance, you see what happened, right? Once we get that swing breaker structure, and now we look for, okay, where was the supply that caused that breaker structure? So we can see where did the institutional money step in, right? Where are those institutional zones? We have those two zones within this range, right? This is the swing high. So I'm always talking about what range we're within. So I'm only looking at the zones that are below this line, right? The current swing range we're in, where is the supply that led to the breaker structure? Well, we have two zones. We have this zone here, which I've drawn on, and we have this zone here. But you see how this zone is already partially mitigated, right? Because price came down, it tapped it, filled some of the orders, and that led to the movement. So technically, the unmitigated extreme is this level here, right? But when I see this and it's only just tapped the edge, and it's obviously quite a big zone, yes, I will be looking for price to come from here. But if we were to trade through here and come up, okay, in that moment, I'm not just going to go, oh, there's no supply here, right? I'm not going to do that. I'm going to draw this across and recognize there's still going to be probably a ton of orders from within here, okay? And I'm more than happy to look for shorts from within here. But whilst it's like that, what you'll see in my charts is I'll do this, and I'll kind of be focusing on this zone, but I'm fully aware that price could push up higher and want to mitigate some orders from within here, okay? Okay, cool. Another thing as well, you sort of want to, it's a bit different to supply and demand, but you want to notice, again, there's going to be more and more confluence over time, you guys will get used to, but you see how we were falling, obviously it's been a long-term bearish trend, but quite impulsively, right? Every time we, break structure, big move, right? Break structure, sustained move, bit of a pullback, but quite a sustained move, right? When we next break structure, sustained move. Here we broke structure, buyers stepped in straight away, right? It's got quite corrective. Try to break those lows here. Let me just zoom in. Actually, I'll leave it out for a minute just to show you. But as we tried to break those lows, failed to do so. All right, come down, break those lows. So we're starting to fall a little bit correctively now, and it's starting to show that potentially the bearish pressure is starting to fall away, and the bullish pressure started to come in. So just something else to bear in mind there, right? The nature of price action was starting to fall a bit more correctively. Okay. And now again, impulsive nature comes in, so we never quite know, right? And if we don't have a lot of the old demand zones to work with, it's hard to know how far price is going to push. I actually went a little bit too quickly there, and this is again why it can be a bit easier in the live market even sometimes, where you can notice things. So swing breaker structure, what do we expect? We expect a swing pullback. What can we look for to help us? We don't have any demand, but we can look for a structure shift. We've had a fractal pullback, so let's see what happens with the next candle. Okay, and then this is one that can be a bit tricky to see if you're backtesting quickly, but what's happened is prices pull back, and then in this one daily candle, we've come down and taken the low. So in that moment, the moment that price trades lower than that low, what happens? This becomes our fractal high, and in that same daily candle, we've then ended the day by breaking that daily candle to the upside. So what is that? That's a bullish daily change of character, all right? So let's just use the 4-hour one. There's your chalk, and I'll quickly show you on a 4-hour time frame just to show you what happened. You can see the order of events, right? We pull back, then we broke the low, and then the same day, because that becomes the fractal high there in the daily chart, right? Then we've taken the high. So we've had a bullish daily change of character, which means we now have a valid daily demand level that caused the daily bullish chalk. Okay, so now this can be a good level to do what? To look for price to come back into, to then play that daily swing pullback up into premium supply. You see how we're kind of just it all started with having that market structure framework, understanding the rules, understanding what we look for, and then you're literally just overlaying these boxes as just an area to, time those entries and look for price to react from, right? So let's play this forward. You see, it's quick. You don't really know something on the daily chart. You might think, oh, wasn't that great? But intraday, we're going to get a nice pullback into here, okay? And then we're going to get a push up. We'll talk about multi-time frame analysis a lot more in a future lesson, but you see there, quickly, price pulls back in, taps, and then we continue to the upside, right? So remember, I think you would have seen this in the S&D zone creation video. If you remember this, when I talked about this is the 4-hour buy to sell range, right? Whoops, didn't mean to do that. This is the 4-hour buy to sell range, right? We come up and we initiate. But what is a range on a lower time frame? What is that on a higher time frame? So a range on the 4-hour chart, if we jump up on the daily chart, what is it? It's a pivot zone. So hopefully you remember that now from the theory lessons, right? And that's what we're doing. You can read what other time frames look at without ever having to look at them. So intraday, we got that pull back into that level, could look for potential longs, then try and target higher up into premium supply. Then we come up into this level, pretty strong reaction. Okay, pretty good sign now that potentially we are ready to target this week low. We do have some demand in the way, right? We have this demand that caused the break of that fractal high. And this is where potentially there could be longs. You could look for longs, but you have to ask yourself, based just on the confidence we're using here and just looking at one time frame, how likely is it that this is going to do that movement? It could do, but you have to, this is what I was saying, focus on the pro trend stuff and ask yourself, what was the objective of price action and has that objective been achieved? Well, the reason the fractal structure shifted bullish down here was to facilitate that pullback to premium supply. Premium supply has now been mitigated with momentum. So it's much more likely now that the demand levels are going to start to fail because supply is probably going to be in control. Not always, but on the balance of probabilities. So let's see what happens. And then price trades through it, right? So we're not too surprised. This zone down here is already mitigated, so not really be looking at anything. And now what we have is that bearish daily change of character, signaling that swing pullback is likely finished. And now we have a valid daily supply zone, right? So now this, on balance of probabilities, is probably higher probability to look for shorts from. So price pulls back into it, fills up some of those orders, and this is where we can look for shorts to try and target down towards this week daily swing low, right? This being the low. So you can see that's what we're working with. But again, it's all probabilities, but this is the framework we'll be using day by day. And then on the 4-hour chart, or the M15, or whatever you want to use, we'll be then looking for price to pull back into here and then look for our lower time frame confirmations, right, to trade that movement. Okay, that ends up looking like it's going to fail. However, this zone hasn't invalidated yet, so there probably could be some orders from left, but it's not a good sign that we've reacted and we pushed up higher, okay? So let's see, and then that zone fails, okay? So again, probabilities, right? And using multi-time frame analysis, we can try and spot when this may happen ahead of time, but it ends up failing. So now we pushed up higher. We do have this last line in the sand. This is sort of the last level of supply that needs to hold if this swing high or the bearish trend is going to stay intact. Now, it's not ideal that we've already had a decent movement away, but it's quite a large zone, so there may be a decent amount of orders from within here. So let's see. The other thing now we need to be aware of, though, as well, is we kind of have that much clearer internal structure, right? We have that bullish IBOS in here, right, within there. So that's something I would be wary of. I'll make this a dotted line, make it a bit thicker as well. That if we react from within here, I'm going to look for shorts and I'm going to assume that the swing lower high may form, right? Because this is a strong swing high. This is the weak swing low. And I'm going to look for shorts in anticipation that we may get that movement. But I'm also wary that now we have kind of clear bullish internal structure. And if I get short from within here, I can play the pullback into this range. And then I'm going to look for longs in case the internal structure stays bullish, okay? Because you can see now we have this what? We have this internal demand range, that daily demand range that caused that bullish IBOS. Now, obviously, that's massive, so I'm going to refine that zone a little bit. So you can start from the bottom, and you can see that zone's already been mitigated. So kind of let's move it along, right? That's been mitigated, so you can move it to this level here, and then you've got that candle there, right? That would kind of be a level I'd be wary of. So let's pay this forward. Start to get a reaction from that level of supply. Now we're coming into the demand level, and then you see nice big reaction. So you could look for shorts from within here, take your profits from within here, or look for a hedge and get long. And now this big reaction, I would say that this is now a weak internal high. Why, where I'm drawing here, why is this a weak internal high? It's weak because look at the internal structure. We've pulled back, we've broken that high, right? So this is a strong internal low. So now when we pull back and it's holding, that demand's going, this high here has failed to do its job, it's failed to break structure, and we're going, okay? So this is the internal range we're within. Okay. Now, let me play this forward a little bit and I'll talk about it more. And then we end up breaking higher. Okay. So that's not always going to happen. Remember, I'm always trying to talk in probabilities. I always say this will happen. I don't say this will happen. I say on average, this is more likely to happen, right? So this can look a little bit messy when we first look at it, but let's just clean things up a little bit. What did we have? We had a daily swing breaker structure. So this was our daily swing high and our daily swing low, right? This is the daily range we're working from within. We had the pullback up to premium level of supply, right? So when we came into here, we were well within our rights to assume that the pullback is complete, that the internal structure may shift bearish to then target that swing low, right? Because that's what happens a lot of the time. But eventually that's not going to happen, because eventually the swing trend is going to switch bullish like we have done here. So when you have big, clear internal structure like this, we can look for the shorts from within here. But as price starts to approach that strong internal low, and we know there's demand here, we have to be very careful that that can happen. And that's fine. And that's why we can play ping pong, and we can look to play both sides of the market as long as we have that deeper understanding of price and risk to reward is on our side. Okay. That's why we end up breaking higher, and then we end up switching bullish. Okay. So whenever you get that kind of that new swing trend, what I like to do again is I mark on, that's my strong swing low now, right? And now what I'm going to draw on is all the unmitigated demand zones. That's what I do. What you'll also see me do in my charts is I'll delete all of the previous analysis, and I like to just focus on the recent swing range, right? It just helps me to keep my mind fresh. I'll delete all of this old internal structure most of the time, and I'll just go, where are my unmitigated levels? Right, you can paint the story a little bit. You can see all of these are mitigated, right? We start to have this what's called a demand chain, so a series of mitigations. Then we have this level here, right? So you can see really now this is the unmitigated extreme, and then we also have this level here. We have the level that sort of directly led to that swing breaker structure. Okay. Now, if you remember in the previous lesson, when we shift bullish, what happens to old supply zones, old unmitigated supply zones? They become reaction points for pullbacks. So we look for price to move into here, and this is a potential level where we may see a bit of a swing pullback down into demand, but we're not expecting that movement to do that, are we? Because we're bullish now. So now we're just expecting a bit of a reaction potentially into demand before we push up higher. Okay, so any old unmitigated levels, I know we hit this range, but I'd be wary of a single candle like that. Any of these old ones become those reaction points. Now, let's say this was your live market chart. I wouldn't have a million zones all drawn on. Just look at the most recent one, be aware of the ones and just have them reined in. That's just my personal preference. I like to not get too attached to where price has to reach up here. Let's just focus on the most recent one and keep it simple, okay? We'll get into the end now, so don't worry, I'll kind of start to wrap this up. But you see, intraday might have been a little bit of a quick 5-hour little pullback play from here, right? Because if you just go on the daily chart, you go, that didn't even hold, worthless. But intraday, you may get a very, very quick move. But another thing, if I haven't spoken about this already, I can't remember, is when we initially see that first swing trend change, very often momentum will be at its highest. And that's very often where you won't see price pull back straight away. We may move for quite some time. And also when it does start to pull back, very often it won't pull back very deep. It'll be a quick pullback and then we continue higher. Just because when you first get that shift in structure, typically momentum can be quite strong, okay? And I know it's the opposite of that is obviously we were downtrending for a year and a half or something. And as you start to get towards the end of the trend, you see that it starts to get a lot more corrective, okay? Cool. So then, and then we have this zone here, right? But bit of an intraday reaction, and then we've got another level here that potentially price can move back from, so on and so forth. And we start to play those movements, right? We come into demand, and you can start to see how price reacts. We don't get very deep pullbacks. Push up, back into demand, push up into supply, look for quick shorts. You've got the next level of demand, right? Demand is clearly in control, and these are the areas in which we can look for. And at some point, we're going to start to get that deeper swing pullback. So we didn't even pull back there, right? We pushed up higher. Now you've got this inside bar here. So that pretty much brings us to where we are. Hopefully you took some value from that. Kind of just practice on one time frame. Try not to overcomplicate things too much. Just focus on swing structure. Try and focus mainly on the pro trend stuff as well. Sometimes we will get complex price action and it can feel like there's zones everywhere. But hopefully I've kind of tried to do my best to show you how to focus on the main zones, focus on the high probability ones. And when you're just looking at one time frame, it may seem like a zone fails, but on a lower time frame, there can very much be an intraday reaction that you can manage from. So yeah, see you guys in the next one.